Hi, Jonathan York from IRG BOP. This week looking at investment alternatives. Last week we mentioned the EPIC investment, which is available to New Zealand investors. That was generating around a 9.1% distributed income to investors. And this week we're going to look at some bonds and some preference shares, maybe some listed properties as alternatives to just leaving the money on a term deposit or sitting in on a call account. Obviously, with interest rates being particularly low, some of the returns that are being generated from capital at present on interest rates that are sort of 3.5% to 4.5% are probably half of what people were earning approximately 12 to 18 months ago. So bonds, certainly been quite a few bonds issued over the last 12 to 18 months, and looking for a fixed income investment that was going to lock your money in for sort of anywhere between sort of 5 to 8 years in duration, and that will pay a fixed return to you. Now what you have to look at and bear in mind is that on that fixed return, as interest rates start to increase, so the capital value of your bond, if you are looking to access the money before maturity, will decrease. That is the inverse relationship between the price of bonds and interest rates. As interest rates rise, the price of bonds will tend to fall. And investors have to bear that in mind, that although they do have access to their money, if they were to access it before the maturity date, if you had a bond, for example, that's got an 8% coupon, currently would be trading at around a sort of 6.5, 6.8% yield. That bond will be trading at a premium to its issue price. So for every $100 of debt that was issued, you would have to pay approximately $105. So if you hold that to maturity, the funds that get paid back to you will be $100, whereas you would have paid $105 for the privilege of receiving that 8% return to you. And obviously if you access that before maturity, price can increase or decrease depending on circumstances and asset quality, etc. So you do have to bear that in mind when you're looking at bonds. Another alternative out there that has been quite popular in over the last sort of 12 to 18 months has been perpetual preference shares. There are several in the marketplace at present. Probably the most popular would be Rabobank, ANZ and BNZ. Some of these are on a yearly reset, some are on a 5-yearly reset. And again, what you have to bear in mind and consider very carefully before purchasing them is firstly interest rate that is applicable, the yield and the price of the actual security. As an example, Rabo 1, which was issued at about 9.4%, is currently only returning about 3.8 to 3.9%, but is reset every year. So as interest rates look to increase over the next 24 to 36 months, the capital price of that security should increase. Capital price at the moment, you're currently purchasing that at around 82 cents on the dollar. So if you were to purchase that today, your return will be around sort of 4.1, 4.2 on a running yield until the next reset date, which is coming up in the next couple of weeks. That's unlikely to be too much change from where it is at present, but if we were to fast forward 12 months, most commentators expect that interest rates will be higher than they are now. So for your 82 cents you purchase your $1 of debt, you'll then receive an increased interest into your bank account after sort of 13 months. So potentially you will get some capital pickup on that investment as well. The investment is callable from 2017, and if Rabobank did decide to call it, i.e. pay it back, for every 82 cents that you invested, you will receive $1 back from that date if they decide to repurchase it. So you do have to bear that in mind. If you look on the other side of the coin with the BNZ and the ANZ preference shares, they are currently trading at a premium. Bishop 1, the BNZ Series 1, is currently trading around 102.5. ANZ is around 105, 106. So if they were to be called back, and again the call date for those is approximately 2017, for every $1 of debt that you purchased, you will purchase that at a price of $1.05. If they recall it back, you will only get your $1 back. But in the meantime, you will receive a higher interest rate. On Bishop 1, you're currently getting about 9.6. On the ANZ, you're getting about 8.7. ANZ is fixed for 5 years, so is the Bishop fixed for 5 years as well. So you do have to bear these in mind and look at the full mechanics and all the idiosyncrasies of the investment before just looking at a particular bond or a share and say, oh, that's yielding 10%, therefore it must be the best interest. You've really got to look at the reset dates, when they're callable, etc., to see really what is best to fit with your specific needs of your portfolios. One of the other options out there, the listed property shares. Listed properties trusts have done particularly well over the last sort of 3 to 6 months. If you take one of the examples, ING, you could have purchased that share around sort of 3 to 4 months ago. That was trading just below 60 cents on the dollar. Current trading price at the moment is around 79-80 cents on the dollar, so you would have picked up 20 cents capital appreciation, and you're getting a distributed yield. If you picked it up at just below 60, you were getting distributed yield of approximately 10%. That's also a pie structure as well, portfolio investment entity. So some of the distributions are able to be distributed tax-free and can be beneficial for some investors out there, as the pie tax is a final tax and therefore doesn't have to go onto any tax returns. So again, worthwhile looking at the property trusts. Say you've got ING, you've got the ING Medical, you've got Kiwi Income Property, you've got AMP, you've got Goodman's, and also Property for Income. Certainly worthwhile looking at an alternative source of income. Do generate some pretty good returns, and there is also some advantages there that you've got access to your money obviously on a sort of 3 to 5 day notice because they're just listed as a little share, but also as well obviously you've got some potential for some capital pickup over time. So that gives you some alternatives out there for some investment income. If you're looking for some interesting discussion, we're going to be running a couple of seminars here in Tarong on the 20th of October, 2 o'clock and 5:30. Give us a call to reserve a place. We're looking, the subject is a 1 year on and where to now. Obviously looking back at what's happened over the last 12 months and looking, trying to look forward and predict where we anticipate the financial markets to be going. Full disclosure statement is available on request. You can give Lorne a call on 0800 867 323 or check out the website irgbop.co.nz. Thank you.